Let's face it, tariffs are back in a big way, and their ripple effects will touch nearly every corner of the economy. This isn't just a policy change, it's a seismic shift that could reshape how we shop, work, and live. But here's where it gets controversial. While some see tariffs as a necessary step to protect American industries, others worry about the potential costs to everyday consumers like you and me. So, what's really going on, and how will this impact your wallet? Let's dive in. On April the 2nd, President Trump signed an executive order that set wide-ranging tariffs into motion. After months of delays, negotiations, and adjustments, these tariffs have finally started taking effect. For most countries, the tariffs now stand at 15%, but certain nations, like India, could face significantly higher import taxes. According to the latest research from the Budget Lab at Yale University, the US is now imposing its highest tariff levels since 1933, with an average rate of 18.6%. That's a staggering figure, and it raises the question, what does this mean for America? And for you personally? One thing seems clear. Prices are likely to go up. Economists generally agree that the financial burden of tariffs doesn't fall solely on one party. Instead, it's shared among foreign exporters, US companies importing goods, and ultimately, consumers like us. For now, many businesses have chosen to absorb the added costs rather than pass them directly onto shoppers. Take General Motors, for example. In July, the automaker revealed that tariffs had already cost the company approximately $1.1 billion in the previous quarter. Rather than raising car prices immediately, GM opted to take a hit to its profits. But this approach isn't sustainable in the long run. Eventually, companies will need to negotiate with overseas suppliers to share the burden. And some of those costs will inevitably trickle down to consumers through price increases. So how much more will we end up paying? That's the million-dollar question, or perhaps the $2,400 question, according to estimates from the Yale Budget Lab. They project that households could face an average annual cost increase of $2,400 due to tariffs. However, predicting exact price hikes is tricky because the impact varies widely by product. For instance, clothing and textiles are expected to see some of the biggest short-term jumps, with shoe prices potentially rising by as much as 39%. But here's the catch. A 15% tariff on European imports doesn't necessarily mean you'll pay 15% more for your favorite bottle of Italian olive oil. Retailers have some flexibility in how they adjust prices, and both exporters and importers might shoulder part of the cost. Still, there's no denying that shoppers will feel the pinch eventually. And then there's inflation, a word that tends to make people uneasy. While consumer prices rose by 2.7% in July compared to the previous year, economists anticipate that inflation will tick upward as tariffs continue to roll out. The good news? Even with this increase, inflation rates are still far below the peak levels seen in 2022, when they reached a staggering 9.1%. But here's the issue. Inflation has a psychological impact. As Raphael Bostic, president of the Atlanta Federal Reserve, recently noted, when inflation dominates headlines, it influences how people think and act. If consumers and businesses start worrying about rising costs, they may become more cautious in their spending and investment decisions, which could further slow economic momentum. But wait, there's more. Tariffs don't just affect what we buy. They can also hit closer to home by impacting job security. Recent data from the Labor Department shows a troubling trend. Only 73,000 jobs were added to the economy in July, and revisions erased earlier gains from May and June. Although the unemployment rate remains relatively low at 4.2%, economists predict that hiring will slow down as companies grapple with higher tariff-related expenses. For recent college graduates and others entering the workforce, finding a job might become increasingly challenging. A weaker labour market not only affects livelihoods, but also dampens confidence in the future, leading people to tighten their belts and reduce discretionary spending. Now, here's the silver lining, or at least a glimmer of hope. Despite all these challenges, most economists do not foresee a full-blown recession on the horizon. Surveys, including a recent one from the Wall Street Journal, suggest that while growth will likely decelerate, the economy will avoid plunging into a downturn. In fact, stock markets have shown remarkable resilience, with both the S&P 500 and Nasdaq hitting record highs recently. Investors seem optimistic that the US economy can weather the storm brought on by Trump's tariffs. Still, whether or not a recession occurs, one thing is certain: the era of tariffs will leave no one untouched. From businesses navigating supply chain disruptions to families facing higher grocery bills, the economic landscape is changing. And this is the part most people miss. The true extent of these changes won't be fully understood for months or even years to come. So what do you think? Are tariffs a necessary evil to protect domestic industries? Or do their downsides outweigh the benefits? We'd love to hear your thoughts in the comments below.